Hi, welcome to this video today. Just like to continue regarding the pair I identified last week in my video, which was NZD CAD short. This pair, looking at the chart right now, hasn't really moved much from when it opened last week. In fact, it's climbed a very small amount. Still think this is a good trade currently. Going on the prior 2 weeks to last week, that's a sell signal for me, these two red lines, two candles here. Yes, price did pull back. You can see just here, price pulled back a bit during that week, but it didn't get that far. So it didn't break much above 90.39. Obviously 90 being the key level there. So we're looking to see more downside this week on that pair, so I'll keep an eye on it. One thing to note is that there is CAD news out this week. We can see this week we have a core inflation rate year on year as well. This May, previous was 1.5%. Consensus, not quite sure what the difference between the consensus and forecast really means, but interesting that the consensus says 1.8%, so that's obviously an increase in inflation rates, which it could be significant. It may well move this pair further to the downside. Again, more fundamentals regarding this pair is that NZD in the last meeting implied they would potentially lower the interest rates. But again, it's only they could be just saying that just to talk the currency down a little bit. But even so, that pulls the bears into more stronger position on this pair. And like I say, if the Canadian news economic data is more favourable, which it might well be, again, that will help this pair sell off a lot. Again, it'll be interesting to see how this pair opens on Sunday this evening, whether it gaps or not. Again, I'm going to do another video on this as to why currency pairs gap. You see the gaps in candles sometimes. I'll do an explanation on what my theory is on that. So for this week, currency pair I really like out of all the pairs on my broker platform is Euro PLN, so Euro against the Polish Lottie. Why do I like this pair? Okay, going back to what I call my 2-week rule, I always look for currency pairs on a weekly time frame. So every weekend, I check all the currency pairs and check those pairs that match this criteria. In that I'm looking for two counterbars, either red, so for example, this red one here. We can't see my cursor, unfortunately, because of this video recording software I'm using currently. But this red candle here and this red candle here, that's 2 weeks worth of continuous downside movement on this pair. That says to me that's a pair to look at, to investigate a bit further. And so I've done some investigation into this pair and looked into what else could justify selling this particular pair. So ECB meeting last week said that they'll keep the rates unchanged and remain so until inflation hits around 2%. ECB to provide additional liquidity to the banking sector. Both those two statements really are bearish for a currency. On the flip side, the Polish central bank have stated in their last banking meeting, you can see on YouTube, which I'll put a link under this video that will contain both the ECB meeting and the Polish central bank meeting. And listen to both and just compare. Unemployment is low. I've done a check, and the unemployment in Poland is actually very similar to the unemployment in Germany currently, which I was surprised at. Also, in their Monetary Policy Council decision making held on the 6th of March, so it's over a month old, but it says that certain council members said there were factors in which in the medium term could push inflation to higher levels than assumed in the projection. and it might be justified to consider an increase in the interest rates in the coming quarters. I find that really interesting. I mean, I know that anything can happen and they can change interest rates any time, but I did wonder what what those factors are that these council members felt that could push inflation higher. I wonder whether or not it's companies that are possibly willing to invest more in Poland. Is because of the Brexit issue in England, UK. Could the companies who would normally come to the UK to make things, could they go to Poland instead because of the uncertainty as to what's going to happen with Brexit? And that makes me wonder as to why. Also, if you look on the chart again, you can see there's two red bars. Why did it gap last week? You can see this gap opened here, but this was the previous week. Last week it opened here, climbed up, and then retraced all the way back down again. That's really interesting for me. Also, what's interesting is next week we have some Polish news coming out. So we're going back to Monday. So tomorrow we've got inflation data, month on month and year on year inflation data. And this is interesting. Year on year inflation data is previous 1.2, consensus forecast 1.7. And that is quite and also coincides quite nicely to what these council members stressed at their monetary policy meeting, that there were some factors that could push inflation higher. Well, for whatever reason, someone seems to think that that could be the case. So it may not hit 1.7, but if it's higher than 1.2, then that's quite interesting and would definitely help, I would say, to shift this pair down further on this chart. Again, fairly good risk reward. It could possibly go down to these levels last seen. It's a long-term trade for me. This one would be there's no negative swap. We get a little bit of positive swap on the pair, very small, but at least it helps. And yeah, I would say it's a good risk reward on this particular pair. So that's the video for today. Thanks for watching me. I'll put some links beneath the video for calculating your currency risk. One of the things I believe in now is to calculate your risk before you take any trade. Really important for you to do that. I have some tools that can help you do that and prevent any unwelcome surprises that you may have when you trade currencies. I know when I first started trading currencies, I didn't really know what I was doing in terms of trading, but especially in terms of managing my risk. I had no idea how much risk I was taking on any trade. And typically I'd always put too much on, and then when the trade went against me, even if it didn't even hit my stop, I could see that my loss was building up considerably, far more than I anticipated, which drove lots of emotions, feelings as to why I took the trade in the first place. Maybe make a little more wrong decisions. So really key thing is work out how much risk you're taking. If you're an experienced trader, you know what I'm talking about. If you're a new trader to the markets, one of the first lessons to learn is to calculate your risk, work out how much you're risking. So I'll put some links beneath the video. Check out other videos on my channel that can help. Any comments, questions, put below this video. And yeah, thank you for watching.